The S&P tech sector, I'd rather talk about that toilet, has risen for the past 15 sessions. It's the longest winning streak ever. Wow. Where's tech headed next? That's the Trading Nation team. Ari Wald is a technician with Oppenheimer. Eddy Elfenbein edits the Crossing Wall Street blog. I mean, Eddie, I said that tongue in cheek because here's the thing. News is, man bites dog. Dog bites man is not news. What's normal is not news. Every day has now become a new high. At what point do we sort of, quote, make news because the market does something unexpected? Right now, it's every day. We're up every single day, which makes me nervous, by the way.
I think you're right to be nervous. The S&P 500 tech sector hasn't had a down day all month. It's gone up 15 days in a row. It's close to getting out number 16. I don't know if we'll be able to do that. But just to put that in perspective, the Dow in 120 years has never had a 15-day winning streak. But this is how it breaks down. The earnings for the S&P 500 tech sector were very good. Only 5% of the stocks missed earnings. That was the best of the entire of all the sectors in the S&P 500. So I would say for investors playing the broad tech sector, this is a great opportunity to take profits, to pare back your holdings. If you have something like the XLK, take some money off the table and redeploy that. But here's the key thing to remember about the XLK and this tech sector is it's an overwhelmingly concentrated index. Just 4 stocks, Microsoft, Google, Facebook, and Apple, they make up 40% of the index. The other 60-odd stocks make up the other 60%. So when you look at that, I think there are good names. If you want to play names, Apple, Microsoft, a stock I own in my fund, those are good names. But the more marginal names, I'd stay away from. Take some profits. If we offered an award for the best sort of stat or random thing in the show every day, you'd win. You'd win the Melissa Lee annual or daily award for that 15-day move in a 100-year stat for the Dow. Ari Wald, it's incredible. Is it healthy? I mean, is the line straight up? Is it going to continue going straight up?
It's not going to continue going straight up, but I think what we're seeing is very strong momentum to this. It's worked up a lot. I think it's probably due for a pause, but I think if you're in it, you let it ride, and if you do get a pullback, you want to buy it. That we like tech for the long run for a few reasons. One, if you look back at the past few years, tech has really shown, it's really the one sector that has shown it can be a steady leader through these various market rotations that we've had, whether it be gyrations in interest rates, commodity prices, currencies. Through all those, tech is the only sector that has shown it can lead through all the ebbs and flows. Point two is the strength is really broadly based across capitalizations, across industries. And then the final point, if you look at the trend, specifically the sector versus the market, we're breaking out through 5-year resistance, getting back to levels from 2002. I think that chart indicates tech can remain market leadership through the course of 2017.
All right, Ari Wald, thank you very much. Eddie, and just if our viewers missed it, your stat is that in 100 years, the Dow has never had a 16-day winning streak, but technology has. Eddie, thank you. Only 11 minutes for you to lose your award.
While it is true that volatility can benefit the trader, it can also lead to chaos and a greater amount of risk. In volatile markets, consider narrowing your risk parameters to help limit losses while capitalizing on the swings that do go in your favor.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.